What's up, YouTube? It's Kenny again. I'm driving across the country toward California. Oh, I think I'm in Arizona, or I'm in New Mexico. My bad. And I wanted to make a video about the 2021 stock market and about my goals for 2021. Kind of recap what I did over the last year, and talk about what I think is going to happen in the stock market in 2021. And we'll talk about what sectors and some stocks I think are going to do well over the next year. And so let's get into it. First, I want you to hit that subscribe button, guys. Smash it. Hit that subscribe button. Hit the like button. Help me grow this channel some more. Now, I'm a truck driver that drives across the country all the time. And all I do is just trade stocks while the market's open while I'm driving down the road. I'm a smart guy. And I just, I'm not a financial advisor. I'm not your mama. So take whatever I say with a grain of salt. And let's talk about it. So, over the last year, my Fidelity account ended up at a 77% return for the year. And my Webull account, which is very small, ended up at about a 63% increase on the year. I only traded for 6 months of that year, and it took me quite some time to get my accounts built up to where they are now. In particular, my Roth IRA. At the end of the year, my Roth IRA is at $8,230. Of that money, I put in $5,000, $1,000 of which was just within the last couple of weeks. So really, it took me a long time to build it up to $4,000, and then I put another $5 in right at the end. So basically, like I said, 77% is what they're calling it, the return. All right, so in the Webull account, which is a regular taxable account, I only buy stuff in there that's long term. It ended at about $550. And there's not a whole lot in it, to be honest with you. I'm just starting to try to build that up. So for the next year, my goal is to take that Roth IRA at $8,200, finish maxing it out for this last year, which will put it at $9,200, and eventually throughout the year, I will max out for 2021, which will be another $6,000. So at, based on where it's at right at the moment, that'll put me at about $15,000 of my money in the account, my money or the gains from last year. And then so I'd like to get another $10,000 in gains in that account, bring it up to $25,000. That's my goal for this year. I'd like to do way better than that, and we're going to try. But my main goal is going to be to try to hit that $25,000. We'll see if we can do it or not. The Webull account, the cash account, I intend to continue to build small long-term positions there, and also to buy some Bitcoin throughout the year. I'd like to start building that account up a little more, but I'm limited on how much money I have. I have some other things. My son, I'm gonna have to buy my son a car coming up pretty soon, and so I'm just gonna pump as much as I can into them and try to hit these goals. So let's talk about the stock market going forward. A lot of people have said that they don't think it's going to be a great year, and a lot of other people have said they think that 2021 is going to be a great year. Okay, I think that overall 2021 is going to be a good year for the stock market. We just passed the stimulus. The Fed is still supporting things. I see another stimulus coming toward the beginning of this next year, and I think that we're going to be okay. There could be some corrections here or there, but I don't see any kind of massive drops or anything. Although I do think that the sector rotation is really going to start happening this year. I've talked about that in another video, but basically I think that a lot of people have been putting their money into big tech and into some of these stay-at-home type of stocks, and have pulled their money from a lot of stocks, and I think that that's going to start rotating back into these other stocks. As the virus begins to subside, the vaccine starts to take hold, I think that we're going to see that sector rotation come about throughout this year. It could be a slow process, or there could be catalysts that could make it happen really quickly. At any rate, I think that recovery stocks are going to do really well over 2021, okay? I think that some of these sectors like movie theaters, casinos, hotels, airlines, banks, as well as cruise lines and amusement parks, I think these things are going to do well over 2021. There's a lot of room to recover in a lot of these things. And I think that tech, that these stay-at-home stocks are going to not do as well as they did last year. But I think that the recovery stocks are really going to start taking off and recovering really well, especially in the last half of 2021. I'm currently positioned to take advantage of that. I actually feel like I've got too much money in it, and it's kind of dragging me down, making it to where I'm having a hard time getting as much profits as I want, because I'm sitting there waiting on the recovery stocks that I'm in, which are Norwegian. I've got a huge position in Norwegian relative to my account size. It's close to 30% of my account size that's in Norwegian, and I'm hoping that it recovers fairly quick, over the next couple of months, that I can get into the green and potentially sell it. I don't know if I'll sell it or sit on it. It depends on what the recovery is looking like and the news that's coming out. But I will potentially sell that in the next couple of months, and it could be 3 or 4 months until that happens. And then Cinemark movie theater, I'm also in, and I'm not sure how long I'll keep that. It's not a very huge position. It's only about 50 shares. So we'll see what happens with that as well. So another sector that I expect to do really well in 2021 is clean energy, okay? Solar stocks in particular. And, solar and wind and maybe some stuff like EV charging stations. Just basically all these green stocks, clean energy stocks, stuff like that, I expect to do really well over this year. With Joe Biden taking office, Democrats being in control of the Congress, there's going to be a lot of stuff trying to come through the pipe, at least, to promote this green energy platform. Now, I think that if the Democrats take the Georgia runoff elections that are about to happen this week, as a matter of fact, if they're able to take control of the Senate also, they would be in control of the presidency, the Senate, and the Congress. And if that happens, I expect green energy stocks and solar stocks to do super well this year, okay? And it could even be more EV stock booming. I still expect the ChargePoint, SBE, I expect that to do well. I expect these charging stocks to do well, and some of the stocks surrounding the EV market. But I do think that EVs have had a big run and could be due to either trade kind of sideways and not see all these big pops that we've been seeing, or to maybe even pull back a little bit. As far as SPACs go, I haven't really made a decision on that. SPACs did really well over this last year, and we'll just have to see. I'm going to have my eye on some of these SPACs and seeing if they're still behaving the same way, or if the SPAC scene kind of cools down or whatever. Keeping an eye on that. That's kind of my predictions for what's going to happen. I really think that clean energy, solar and stuff, are going to do really well. I currently have an investment in Enphase Energy, ticker symbol ENPH, and it's done really well throughout this year, and I think it's going to continue to do well. Another one you might look at is Solar Edge, SEDG. Solar Edge and Enphase are competitors in the same space, and they both have been doing really well throughout this last year, and I expect them to continue to do well throughout 2021. Also an ETF you might look at that's done really well is TAN, T-A-N. It's focused on solar. That could be one to look at. I think ARK Invest their funds will probably do well this year. So I think there's a lot of profits to be made in 2021. Okay, will we have the excellent year that we had in 2020? who knows, man? You know, nobody knows. I don't have a crystal ball. I do know that a lot of investors who've been doing this for a long time have been warning that, you know, a lot of us, like myself, who got into the market in 2020, like it was a fucking boom year. You know, it boomed, and we may not necessarily be prepared for what's coming when all this stuff starts to slow down and the market gets more back to normal. I don't know. I have my own thoughts on it. I think that a lot of the retail investors that have jumped into the market over the last year and a half, as we've seen fees disappear and minimum balances disappear and all this stuff, I think that they have a lot more sway in the market than some of these people are given credit for. So I think that we could still continue to see these big run-ups in SPACs and, you know, hot sectors and stuff like that, because there are so many retail investors in the market now that were not in the market previously. I think that, you know, one of the things that I think some of these old school investors are not seeing is how much the market, the way the market behaves, has been affected by all of these retail investors. Because, you know, it was just not too long ago that, you know, it cost you $5-10 every time you traded something. I mean, it's only been a year and a half, maybe, you know, maybe a little longer since Robinhood hit the scene and did all the no fees and everything, and it pretty much forced everybody else to get rid of their fees. Before that, when I was looking into trading stocks years ago, you know, it could cost $5, $10, $15 every time you traded. And so that was a big barrier to entry. There were also all these minimums and stuff that were big barriers to entry for people that are not there anymore. And so while I do believe that coronavirus was part of the reason that a lot of people jumped into the stock market, I think that the bigger overarching reason that the market is so different is that all these fees are gone. And so all these people have now found that they can go trade without all these hefty fees dragging them down. And, you know, retail investors and young people in particular trade a lot differently than has been done in the past. You know, when you think about it, the people, the vast majority of the people that controlled all this stuff and in the past and were the ones in the stock market were like stockbrokers, hedge funds, and you know, entities that trade with other people's money. And so they have people looking over their shoulder and breathing down their neck constantly. And if they don't perform as well as their buddy performs or the next guy performs, they're fucking fired. So they have to be really careful about how they invest. They can't invest into all this speculative type stuff that we've been investing in and that we've seen run up over this last year. And I really think that it has a lot more to do with the huge influx of retail investors and younger investors than it does to do with the coronavirus. Because, you know, like I said, you know, for years, forever, it's just been like a slow, 5%, 8% a year. You know, you can't beat the market. Let's just invest in S&P 500. You know, it's been like that for years and years and years. And these people still have that mindset of slow. But these new people in the market do not think that way, you know, because they're not having to be super safe and careful with other people's money. They're able to invest in what they think is the future and able to invest in, you know, their hopes and dreams and stuff. Whereas these hedge funds and the people who have controlled the markets for so long, they don't have the luxury of being able to do that because they're trading with other people's money. And so I think that the market has, at least to a certain extent, fundamentally changed, and a shift has occurred because of all of these new people who have jumped into the market. And maybe we do have a lesson to learn, or maybe the old guard is going to have some lessons to learn. We'll see how that plays out. Let's see. I think that's all I've got. I just wanted to talk about, you know, what I hope to do over the next year and what I think the stock market is going to do over the next year. I'm not a financial advisor. I'm just a smart guy, truck driver, driving across the country trading stocks. And if you like this video and you want to keep track of my journey and see what I'm investing in, hit that subscribe button, like the video, and help me grow this channel. Thanks for watching.